It's official, guys. The Fed is afraid of apes. Literally, in their own words, they are saying that apes, the retail investors, could cause harm to the economy and to the stock market. Now, we all know what they are trying to do here. Essentially, they're trying to pass the blame onto somebody else when there is a lot of other much deeper issues that are going on in the overall economy and in the stock market. But we're going to break down exactly what they said and go over a little bit of the data that came out yesterday about inflation, because I think a lot of this ties into itself and I just want to discuss it with you guys. So drop that like on the video, consider subscribing to the channel, all that good stuff. You guys want access to all of my trades in real time, the link to do so is down below in the description of this video, as well as if you guys are not signed up with any of those brokerages down there, definitely give that a go. Get yourself some free stock. That's probably the best thing you could do to make some free money literally today. Now, let's talk about it, guys. AMC is having a great day as we currently speak, up 4.5%. And really, this whole basis of what the Fed is saying is really just BS. I mean, how do you point the finger at AMC and GameStop when they make up 0.0015% of the overall stock market? Not even a 100th of 1% of the stock market. Does not make a whole lot of sense unless there is a lot of fraudulent activity that is going on behind the scenes with players that do control more money and have a bigger slice of the pie in the overall market. That's really what this highlights to me, and that's why the Fed is so afraid of the apes. Now, it says right here, at the same time, the Federal Reserve also flags several new types of potential risk to the financial system which merit attention and have recently emerged as top investor concerns, including the growing interest in so-called meme stocks. A large group of younger retail investors, spurred by zero-cost brokerages and discussions on social media, have been investing heavily in meme stocks and cryptocurrencies, a trend which can cause stock market volatility in the future, the Fed pointed out. And then another risk they go on to say about Evergrande and the Chinese real estate bubble could spill over into the US markets. But that's what we're talking about here, is essentially when you put all this together, try to make sense of what they are saying when AMC and GameStop make up such a small percentage of the overall markets. Like I said, not even 1/10 of 1% or 1/100th of 1% of the overall stock market. What is bigger is the hedge funds and institutions that bet against this. As we do know, Apes, the retail investor in general, has done significantly better than hedge funds and institutions since the pandemic started. Since the crash in March of 2020, retail investors have done phenomenally well, and that money has come from the bigger guys. And when we're talking about millions of retail investors, that's really what the Fed is concerned about. And that's really what they should be talking with the SEC about, is how to limit the back end risk of not the retail investors investing in these stocks and just agreeing that they like the stock, they want to invest in it. Not trying to limit that, but trying to limit the exposure and the fraudulent activities that is going on behind the scenes that really does destabilize the overall markets. All in all, I think it just highlights that the apes are winning and that the Fed, even the SEC, are afraid of the apes and the retail investors alike. We are something to take note about. When we want to do something, we do something, and that's just very key to point out. It's really just highlighting the back end fraud, manipulation, and corruption that is going on in our markets. Now, as far as inflation is concerned, I figured I would throw this in this video as well. If you guys have not seen this, this is really why the markets have been so bloody over the past really couple days. Inflation has taken away all the wage gains for workers and then some. Real average hourly earnings, when accounted for inflation, actually decreased 0.5% for the month. A 0.9% inflation increase negated a 0.4% rise in wages. Consumer confidence has been sliding despite the rising wages, which are up nearly 5% nominally year over year, but have declined 1.2% in real terms. The Fed finds itself under increasing pressure to adjust policy accordingly. And we'll get into this is very important. What looked like a big jump in workers' wages during October turned into just another gut punch after accounting for inflation. The Labor Department reported Friday that average hourly earnings increased 0.4% in October, about in line with estimates. That was the good news. However, the department reported Wednesday that the top line inflation for the month increased 0.9%, far more than what had been expected. That was the bad news, very bad news, in fact. And when you bring this into perspective, last October until now, CPI is up 6.2%, Consumer Price Index, just aka inflation. So there's definitely bigger issues going on that the Fed needs to be concerned about rather than retail traders. Inflation being another one, as well as the price of oil and everything else. They don't directly have a say in that. They can't directly control that. But still, there's a lot bigger things going on in the overall economy that needs to be addressed rather than just throw shots at retail investors and discussions on social media like here on YouTube, Reddit, Twitter, all these other places. Now, I do think a new Fed is going to be appointed very shortly. I do love Jerome Powell. I think he's done a great job, and I don't think this is him saying this. Obviously, it's not him saying this. It's other people at the Fed probably in agreement with this. But if they do get somebody else into the Fed spot, they could try to push the SEC to do other things. But the SEC has been focused on not the retail investors. The SEC has made it clear they want retail investors into the marketplace. They need to and are cracking down on the back end, the fraud, manipulation, and corruption. Even the interview we've seen with Ken Griffin, obviously Citadel's CEO, he kind of threw shots at Gary Gensler, saying he is quick with his words and doesn't really know what he's talking about. So there's definitely some real issues going on here. Just wanted to bring this to your guys' attention in a short little video. So drop that like on the video, consider subscribing to the channel, all of that good stuff. Check out the links in the description for free stocks. And if you want access to all of my trades in real time with stock options and or crypto, whether they are long-term investments, day trades, swing trades, whatever the case is, even crypto, check that out. You guys will be notified in real time, and it literally pays for itself. So with all of that being said, guys, you guys enjoy the rest of your day, and I will see you in the next one.